Porsche just announced 3,900 job cuts to boost profitability, and this is coming after laying off 2,000 jobs back in February of last month. So things are not looking good for this automaker. Porsche is one of the world's most prestigious car manufacturers and recently announced its plans to cut jobs for a cost-saving initiative. The company aims to increase efficiency and adapt to the rapidly changing automotive market. This decision has significant implications for Porsche employees, as well as the broader auto industry and even the luxury car market. So why is Porsche laying off workers? The job cuts are part of Porsche's plan to save up to $1.1 billion annually. The company claims it has rising costs, the transition to electric vehicles, and the global economic uncertainties are the key reasons for these layoffs. Porsche, like many other automakers, are dealing with higher production costs, supply chain challenges, and increasing competition from both traditional brands as well as newer EV startups. Despite record revenues in the recent years, the company wants to ensure long-term profitability while making necessary investments in new technologies. Electric vehicle development in particular requires massive financial resources, and Porsche is focusing on streamlining its operations to maintain its competitive edge. The layoffs will primarily affect administrative and non-production roles. This suggests that Porsche is not reducing vehicle production, but instead focusing on cutting costs in other areas so they can focus on production. The company plans to offer voluntary buyouts and early retirement programs to reduce the workforce in a way that minimizes disruption. While Porsche has not announced specific locations or departments that will be hit the hardest, reports suggest that the cuts will impact employees in Germany, where Porsche's headquarters and main production facilities are located. And it seems like the German industry is getting hit pretty hard as they have laid off 2,000 workers in the past month. So it's very unfortunate to see all these workers losing their jobs and having to struggle for another position. For the recent 3,900 layoffs, these layoffs could be life-changing, especially in this job market. Many workers will now need to find new jobs in uncertain economic climate. However, Porsche has promised to offer support programs, which is a nice thing to see, which includes job replacement assistance, retraining opportunities, and severance packages. But losing a stable job, especially in a company as prestigious as Porsche, is still a significant blow. Many of these workers have likely built their careers at Porsche and now face the challenge of adjusting to a new changing job market. While Germany has lost While Germany has strong labor protections, finding new employment in a competitive industry can be very difficult, especially for those who have specialized skills suited to work in Porsche's harsh environment. So, how does this affect the auto industry? Porsche is not the only automaker making these tough financial decisions. Other major car brands such as Volkswagen, Ford, General Motors have all had job cuts as well or restructured their workforce in response to economic challenges. The automotive industry is undergoing a massive transformation with the shift to electric vehicles, requiring significant investments. Traditional car manufacturers are finding it very hard to balance investing in new technology while maintaining profitability. The Porsche layoffs could signal a large trend where even luxury car makers can struggle to adjust their budgets to remain competitive. Additionally, as EV adoption grows, traditional automakers are being forced to rethink their business models, production methods, and supply chains. Companies that fail to adapt quickly may struggle to keep up with newer, more agile competitors in this EV market. So, how will this affect Porsche's future? Despite the layoffs, Porsche remains one of the strongest brands in the automotive industry. The company has a loyal customer base and continues to innovate in both luxury gasoline powered vehicles and high performance EVs. The savings from these job cuts will likely help Porsche fund new vehicle development, particularly in the EV sector. Porsche has already launched electric models such as the Taycan, and more EVs are expected in the coming years. However, the decision to cut jobs also carries risks. If Porsche's cost-cutting measures affect product quality or innovation, it could harm the brand's reputation in the long run. Porsche must ensure that while reducing costs, it does not lose focus on the luxury and performance aspect that makes its cars desirable. And if we take a look at the stock price, it is sitting at $5.79 per share, and it is down 44% in the past 5 years. So they really are struggling, as with many other car manufacturers. So, our final thoughts on these layoff decisions: it's a major shift for the company and will have lasting effects on its employees and the industry. While Porsche is making these changes to remain competitive, the move highlights the challenges faced by automakers in a world shifting towards electric and sustainable transportation. For workers, this is a difficult time as job security becomes uncertain. For the auto industry, it signals a growing pressure on manufacturers to adapt or risk falling behind. So, as Porsche navigates within these changes, it will need to strike a careful balance between cost cutting and maintaining its reputation as a leader as an automotive luxury excellence.